Hey everyone, and welcome back to Watch Trading Academy here on YouTube. And today we are going to be talking about something that is kind of the elephant in the room: why Rolex and Patek crashed harder than just about every other brand. Why did they go so high and then fall so short? Now, contrary to what you might believe and see all over the internet, you'll see a series of channels right here on YouTube talking about how the recession is basically impacting all this and generalizing everything and blaming the environment we're in for why these crashes are happening. But I am here to offer you a very different theory of what is happening and why it is happening. So first off, you'll notice a series of new videos launching by a lot of well-known watch YouTubers talking about the fact that the watch markets are crashing and that it is now more difficult than ever for the regular guy to become a watch trader or watch investor. Something that is simply not accurate, but very, very fitting to their narrative. And we're going to talk about that because you see a lot of these individuals out there that sell watches for a living, are reselling watches. Basically what I teach you guys to do are not very happy with the work we're doing right here at Watch Trading Academy. You see, because we are teaching you how to become their competitors. And the more of you are educated about what to pay, regardless that you are typically a consumer of their product, or a consumer of your jeweler's product, nonetheless, the more educated you are and the more capable you are of knowing what you're buying and what you should pay for it, the less likely they're going to be able to manipulate you into paying very high prices. And I think a big part of what has been happening has been basically caused by these individuals in order to attempt to teach people who are playing in their game a very valuable lesson, which you should have learned from the very beginning if you followed us, which is don't trust your local reseller or jeweler. And let's talk about why and what has happened to Rolex and Patek, and let's not generalize what is happening as just a recession is coming, so everything is crashing, which is very, very far from the truth. So there is some level of reality. We've talked about this before in terms of markets and liquidity leaving markets when we talk about, the crash of Bitcoin, the crash of altcoins, and more importantly, so much market money being wiped off, right? Whenever obviously the Feds print money, it's easy to say there's money in the economy, people are buying, and they're very happy. And it's very true that there's a lot of indicators showing sentiment for spending way down. So we know this. This isn't news. People are afraid to spend money. They're not feeling good about the economy and what's happening. So there is a reality there that is certainly going to have an impact on some level of price adjustment. But how do we go from certain watches being listed in the 300K range all the way down to 100K? Like, that seems to be pretty extreme for liquidity, right? Especially when we've seen these numbers go up over time and suddenly they're crashing. So in order to understand why this drop happens, let's take a look at the difference in the dynamic of how watches do move up and which watches do not move up and which watches do and why. So if we look at basically the graph, this is the graph for what we consider to be a Hublot here. This is a very basic watch that isn't very adored or liked by resellers. This is a brand that is usually trash talked all over the internet as a crappy brand. Now, I personally like them. I think they're cool and they're really good to flip, and there's a very, very large number of followers to this on the internet, so it's very easy to sell on the secondary market. But nonetheless, there's some reality to this, is that whatever the MSRP is, we'll call this the MSRP chart, right? Whatever that MSRP is, basically 0 to here, let's say this watch was a $30,000 watch, it's very true that the majority of these watches, as I teach you in the training, go down right away when they're used and then tend to kind of hold a steady path. Now, the only thing that happens, this is the wholesale chart, and then here is the retail chart. So one of the things you'll notice is that it's a very predictable chart, very easy to see. You start at a certain MSRP, the watch drops to what I call its bottom cash value. This is what I teach you here in the training at Watch Trading Academy. Again, if you don't know how to trade watches, click the link in the description. You'll learn how to do that and how to find a BCV for any watch. But the point I'm trying to make here is that watch will go down to that bottom cash value and then will hold pretty steady and won't really move. I mean, we've seen this if we took a very basic Hublot Big Bang with a 15K, MSRP. We're seeing this watch drop somewhere around 7, 6, and then it kind of retains that all the way through. And the only real difference is from a reseller standpoint here, we're talking about this margin right here. It's a pretty consistent margin over time. Price may go up, may go down, but there's really no huge offset here to what is happening, right? And because there is no huge offset to what is happening, what ends up occurring is that it's a very predictable way for someone to make money. But it isn't easy to manipulate markets with this for one simple reason. It is because there is just too much volume. Whenever there's too much volume of something, all of these jewelers and resellers, well, they can't really compete with just a common market because there's just so much inventory out there. So they're kind of forced to follow the market. But something pretty incredible happens, and we're going to wipe this off real quick and take a look at the same solution here, looking at not a Hublot, but rather something a little bit more exciting like a Rolex or a Patek, right? So you see Rolex and Patek inventory is more scarce than ever before. So it's incredibly hard to find good Rolex and Patek inventory. So what happens is, unlike the Hublot, when the MSRP is exposed, whatever that is, let's say it's a $30,000 watch or whatever, it will come out and it will instantly start to trend up. It will start to trend up and kind of go up. Unless the watch is discontinued, then it will have a much larger trend up, right? So, a good Rolex or a good Patek will historically not only hold its value and go up on the mere basis that it is very limited and not available. So when something is limited, not available, and demand exceeds supply, then typically the price goes up. And that is historically what has always happened. So why would that be any different than any other watch that is hard to get or easy to get? So let's take a look, for example, at an AP at the same dollar, and the same thing would ultimately happen. And again, if it's discontinued, it will go up. So if we're looking at Rolex, Patek, or AP, or even RM, it seems that this is the trend. So I don't really understand why we would really see drops between 300 to 100. So let's analyze that a little bit further and see how exciting this jeweler manipulation is in the space and why it is happening in general. So I want you to understand something. This is something very powerful, and it's where the reseller market is able to manipulate data online. So if you ever follow tools like Chrono24, if you follow tools like eBay, etc., you will see listing prices. So there's something about listing prices. It's all bullshit, just to be fair. Every listing price on Chrono24, every listing price on eBay is absolute crack, horseshit, completely inaccurate. And there's even tools on these platforms that allow you to see the price index, making you feel like there's some type of new way to differentiate like what pricing is going up or not. And it isn't furthest from the truth, because this is where jeweler and reseller manipulation hangs on, and why Rolex and Patek crashed harder than AP and RM. So when watches come out and they're brand new, they typically go hand to hand into the hands of either end users or they go in the hands of resellers. Now, historically, let's be frank about it, if something gets in the hand of a reseller, well, obviously it's going to resell for more money, pushing the market up, because the watch, while it left the hands of the manufacturer, still ended up in the hands of someone that wants to resell it for a premium or margin above what they bought it for. If a watch, however, ends in the hands of an end user and the watch does not come back on the market, then the pricing is a lot more stable, because the volume is not going to be controlled or manipulated, because people may like their watches and may not want to put them on the market like as soon as it's convenient or when they see lower listings to rise the price, etc. So what jewelers do basically is they go out and they buy from these manufacturers and ADs some of the nicest they can find and hardest to get models. And this is basically the reseller model, but here's the problem. They don't actually list these watches. They control and manipulate the supply market to make it look like there isn't that much supply, bringing in one watch at a time, only to keep raising the price. So an example would be, you would see a watch for sale for 100, and you're trying to negotiate for 90, and that watch sells to someone for 110. Now the next watch that comes up is 130. Now you feel like getting a 110 price is a good deal, when in reality, the watch pricing hasn't moved, but the index has been manipulated by jewelers that have raised the price on you, basically thinking that you're getting more value because the market is going up when it's not. Now, there are individuals who are not trained, obviously, because they don't follow this channel or they're not into the market, and they're seeing these patterns constantly go up. And as a result of it, they start to play in the game too, saying, well, if I buy it now, I'm going to get it lower than if I buy it in a week. So it should make sense. Because these watches are in the hands of resellers, they're creating a very different model of continuous bumps. So if a watch starts here and it goes up and it's not discontinued, but it's in the hands of resellers, it has these bumps. So it goes up, it has these bumps, it goes up, it has these bumps. It is historically going a lot faster and a lot further than what it would do. And at some point, what ends up occurring is if a high level of units enter the market at the same time, then price competition takes an effect and the market has to adjust back down. So therefore, all of this manipulated margin right here starts to be lost all at once, which is expected, right? Like it is what it is. You buy something high, at some point it's going to correct. That is just a reality. Now, if you're holding here and you're a reseller and you're hoping it keeps going up, well, what happens when you have a liquidity event happen where like all of, for example, Bitcoin is gone all of a sudden and you have $1 trillion marked off the board? Well, you have resellers here who are normal day-to-day guys holding watches because, again, they want to make more money, and they're trying to manipulate the market. But guess what? The liquidity left the market. So now they all get scared, and instead of vaulting these watches, they start listing these watches. So they start to basically price compete themselves all the way down back to what I call the price index of where the watch should have been to begin with. So what are we learning here? The baseline is that the original MSRP increase is what we call the index price. And this original MSRP increase simply means watches can be good investments. They're just not going to be investments that bring up 20 to 30% a day like jewelers manipulate the data to do. So if we're looking at what jeweler data manipulation is, it's huge upsides because they're trying to make money. But the baseline of a watch is still a good investment. The way it's being manipulated by the industry, not so much. Now, the reason Patek and Rolex crashed significantly harder than AP and RM is because both of those brands, AP and RM, went for the majority of the stake in the hands of end users. We see this in the car space all the time. If you follow my other channel, Exotic Car Hacks, you'll notice that we see that when cars end up in the hands of end users, their values tend to do significantly better. Lamborghini, as an example, sells more cars to end users. Ferrari, however, sells majority of cars to resellers. So what occurs is while Ferrari's trying to limit their ability to resell cars by saying you can't sell for 6 months, this and that, dealers are playing this game where they're buying the cars back from their own clients in 6 months, and they're polluting the game with resold cars. So what occurs? Well, when you have liquidity index happen, the price of Ferrari used cars comes down because it's way overinflated over MSRP. However, inflated pricing on Lamborghini also comes down, just not as much. So why does it create such a disparity with two competing brands? Well, because again, if a watch or a car is in the hands of an end user, it may or may not need liquidity to sell. If it is, however, in the hands of a reseller, it is forced to sell because it can rebuy the product cheaper. It's a bad bet. Imagine this, you're holding a watch for $300,000. You realize you can go ahead and basically sell that watch for $280,000 and lose $20K. But you can rebuy that watch if you wait 2 months for $150K. So obviously you're not going to want to ride it all the way down because you're going to want to exit losing 20, position yourself $100K better in order to make an extra 20, and now you've broken even. The entire ideology of this process is why when things are in the hands of resellers, in numbers, and panic and liquidity occurs in the market, then they are in need to sell to take better positions. End users are not. Like you might have a guy saying, well, my Lamborghini went down 15, 20,000. Okay, whatever, I love my car, I'm gonna drive it. However, if you have a Ferrari that was in the hands of a reseller that's selling for 200K over sticker, it is not going to crash because the person is like, would I rather make 100 over sticker and sell now or potentially make nothing if I can rebuy my own product later at sticker? Well, the answer is, why wouldn't you want to make 100,000? You would. So anytime a product ends up in the hands of a reseller, it completely trashes and destroys the market in these fake type of kind of increases that occur, which are basically manipulated data. So the reason I'm bringing this up is because you will see a trend now in the same resellers here that basically manipulated the market to crash it, screaming that a recession is coming and the market is crashing. Why is that? Well, this market has dropped over 90 days ago, but they're screaming this now. Here's where more manipulation takes place. Once a jeweler has left its position, so they've sold their position here, right? At the highest peak or near the highest peak because they knew they were ahead of it, right? Well, they want to rebuy their position here or even here, even lower than the price index, because this dip right here, right, is basically their margin. And they want to rebuy their margin very low. So how can they ensure that you sell off your asset very, very low so they can rebuy it? That's how they take a new position, right? Well, all they have to do is constantly scream that the entire market has crashed and everything is dropped, so that you also panic and now as the end user that's later want to now get rid of your watch. But when you heard the news, you're already here. So you've already taken like a 200K loss, right? You're already at like 150 right here. And you're like, oh, I heard about that. My God, I lost 150K. I got to get rid of my watch before I lose another 100K. Ignoring any of the data available to you, you're going to make a choice that I'd rather get 90K out of my watch than nothing. Damn it. The recession is here. As I've been told, everything has crashed. I am going to lose. I'm going to take my 90K. And the jeweler is going to buy you at 90K and then basically resell you at 130, 140, because what he's selling is very different than what he's buying, right? So again, the point is, the more fear you have about selling your item in a time where you believe a hard recession is coming and it is blamed on non-manipulated market data, the more you're likely to basically fall for this while they play the same game again right after the recession happens, raising the prices. Your capacity as a watch trader, as a watch investor, is to understand two folds. There are ways you can play in this game to be really, really successful. I'm going to wipe this for a second. And the game is really simple. You can either get into something like Hublot and basically buy here and ride here and buy your margin here, which is a very safe and simple way like we teach you at Watch Trading Academy, or you can buy your more hard to get Rolex and Patek and let it rise over time and basically make these margins of like 5 to 10% a year. Enjoy it, and once the watch gets discontinued, make even more money. We teach you that as well at Watch Trading Academy, which is a completely different strategy. But one of the more important things to realize here is that if you're playing in the game that jewelers are playing in that market manipulation game, you have to be ready for potentially being intertwined into this crap that they've created over the last couple of years, which has created a very bizarre market where they were making huge 200-300% gains on watches and are now basically crushing the market themselves in order to take advantage of your vanity and buy again. So you have to understand this if you're going to be playing in this game, and this is why it's so important to be equipped with something like Watch Trading Academy, so you can join our network and learn about this way ahead of time, because we've been talking about this for 90 days in our group. And while here on YouTube I'm giving you free education, in our Watch Trading Academy group, which has over 10,000 plus students, which are actually doing this and acting on a daily, having conversations about this, we knew about this 90 plus days ago, way ahead. So our people were able to take much better positions in their watches and not literally get crushed as hard as they have, like for the market. Now, so if you don't want to be a prey to jeweler manipulation or reseller manipulation, or these guys that pretend to basically like be the kings of watch trading when they're just sitting there hawking consignment pieces from one jeweler to another and pretending to own stuff, then you need to be very careful and join and get the education necessary so you don't get burned by these guys. So again, click the link in the description, make sure you like, subscribe, and let me know if you've lost a lot of watches, or I should say a lot of money on a watch, right here in the description. I'd love to hear the horror stories, but more importantly, I'd love to hear what you did to basically make sure you're not a victim and instead a victor. I'll talk to you in the next video for Watch Trading Academy.